Hi, Warriors. How's everyone doing? Alexander, good morning. Sharif, nice to meet you. How you doing, Richard? John, I don't believe those are recorded anymore, the Morning Edge. So, hi, Hugo, Paul, Richard, Jays, Turn Around Wednesday, yeah. Rick, everyone, Ben, Ren, Ryan.
Morning,
How are
Dale.
you, buddy?
All good, mate. You?
Pretty good, man. So,
Hump day.
here we go. God, oil exploded yesterday, and it's such a tempting short right now. Yen, feeble recovery. Ryan, what do you think?
Yeah, I'm still holding along off of 115.
Okay.
Heard of some strong, apparently there's some strong importer bids down there. Stocks getting mixed in through the level as well. So it's definitely where it's pulled up, and one of the levels I had on my chart to try along.
Aussie, pretty important resistance here at 72.20, and we'll see. I think K-Man said, why would you, maybe you don't want to sell it, but we're approaching the level Blake talked about yesterday. What a great call this was down here.
Yeah.
It was almost as good as a short that Blake made down here. So, this is a pivot up here at 47.45. Is there enough juice, or is this enough? I didn't do the fibs on it, so that's pretty important. And
close enough, isn't it?
Close
enough,
could,
isn't it?
Yeah, it could be enough.
Moving.
Yeah, little ABC, and then we have another wave, confirmed lows down here, and the metals are trying. I thought there was going to be a better break to buy, and I'm not long yet. And silver acting a little better than gold, but I don't know. Markets at bottom like this, I don't trust. That's kind of like how the euro looks. When you look at the daily, it's just, a sideways grind. Silver has a little more upside bias, but, when it comes to the dollar, maybe they have to take out the bears first by cleaning out stops. But remember the prisoner formation in the dollar? There's a jailbreak here, Ryan.
Pull a copper.
Steve McQueen is jumping over the fence in The Great Escape. So, we'll see what kind of follow through we have. But there's, someone left the gates open.
Yeah, so they're back. It's not looking clean though, is it? It's not there's still there's a few lows in there that's, you could sort of draw a line against.
Yeah, it didn't take this low out yet.
And
I know that you've been, all this time saying, and you may end up being right, that, the dollar could have peaked. I read a lot of other people's stuff, and Blake interviews Jim Welch a lot, and, he's looking for down, but calling this wave 4 triangle. I wish we had could have gotten Greg in here on the dollar. I guess, we'd have to take out 94.50 to really declare the end of this dollar rally. So I still think there's a shot that, maybe we go as deep as 95 before we get, maybe they're cleaning out the longs here, and then they go for the shorts later.
Well, it's got to be a break, isn't it? If we're getting that far down, then there's going to be some big moves elsewhere.
The metals will fly.
Yeah, I've stuck a couple of buy stops in euro dollar above 114.20. Well, I think at 114.20 actually.
Okay, so how do you come up with that number? Because these highs are like 1383. So you want to see it cleared by not just a few pips in case it's just a stop hunt.
Yeah, there's a little. I've got a couple of little levels, sort of around 114.10, 15. So if I'm going with a break trade, I go above that. If it clears that, then you're hopefully in clear air. I tried to do that with cable yesterday, and bought at 36.15 on the break of 36, and got dumped out on the dip back, and then it's come roaring back again. You can be right, but have your timing wrong, or the market doesn't play ball, and you still lose out. Even when you
it's definitely a grinding. I don't see anything. Gosh, I sound like an Elliotician. Impulsive about this.
Yeah, it's grinding. Yeah,
it's a grinding. None of the RSIs on different TFs are confirming the new high. It tried to here, but didn't. And I did notice one thing in Euro on, I do look at, I confess, I look at 15-minute charts. So,
they're my lifeblood, mate.
Really?
I've got a whole page of 15-minute charts. They tell me everything I need to know during the day.
You know what? That's interesting because I've discovered that, and I told people that, some of the few people I teach that, if I really don't know what's going on short term, 15-minute chart gives me a lot of stuff. So, I thought we'd have, maybe a 1, 2, 3, 1, 2, 3, but it's too messy now. So
they're perfect for, they're long enough to take out, the short-term noise, anything less than 15 minutes, but they're also long enough for the intraday picture. It's everything you need to know intraday.
All right. Well, that gives me even more confidence that I'm, not being, short-term Sheldon looking at, although I used to trade off tick charts.
Oh,
you remember that? Or 1-minute charts.
Yeah.
Anyway, that's when I was trying to make my broker rich and turn my own account. So anyway, I believe that we have some other guys here today.
Nope. Good morning.
There's a guy. There's a guy. Hi, Stel.
How you doing?
Good, man. Do you think we missed the buy point in the metals here?
I don't know. I still think that the most likely scenario, it's not a done deal, I don't think, but the most likely scenario is we have one last push lower. But as I've said before, I want to add to my longs. Am I going to add lower or higher? It's going to make a difference to P&L, but I don't think it's going to make a difference to what I actually do. So I'm still looking at levels. Initially, I was thinking about 21s in silver, but it's going to depend on a lot of things on when we get there. Yes, exactly. Yields, what other markets are going to be doing, etc. So it's either going to be low 21s, or I'm going to have to wait until 19.5 or something like that, or high 19s. So it's going to be one or the other. But or on the upside, if we break above 26, then I'm definitely adding there. So I know it's huge ranges, right? And it's percentage-wise, it's pretty big differences. But guys who know me and the way I've been trading this, I'm not a day trader. I'm not a week trader. I take positions. I accumulate slowly, and I distribute slowly after that. So this is the way I do it. And for people who have been listening, they know last time I did this with silver specifically it took me about 18 months for the price to get there. It was at some point during the COVID crash. My position went down something like 15%. I didn't add stupidly, but I got out a few weeks later at plus 60%. So it takes patience, and it takes very, very low leverage or zero leverage sometimes, and as I said, patience. But metals, I'm not sure that they've reached the bottom yet. I'm
think it'll debating. We'll need like a 2% yield, I'm thinking. That to happen now. That 180, that this is just a pause from 180, and we're just doing a little ABC. Oh my God!
You're really an alienation.
And it's a flag, right? A little flag here, and that we get another pop, and it's a hell of a flagpole.
Yeah, 2% yields are definitely most likely going to send stocks quite a bit lower. And we know what happens. Risk off, metals get sold as well. And I think that might be the final push. But let's see. The main question is inflation. And we have US CPI today, expected to go up at 5.4% core CPI year on year. From 4.9 or 7% CPI up from 6.8. Let's see what happens. It's worth noting that we had China CPI today. I don't know if you guys saw that. Was expected at 11.1%. It came in at 10.3%. Sorry, that's CPI. That's PPI. Sorry, we also had CPI as well, which was lower, but PPI down from a percentage point from what was expected, and down over 2 percentage points from the last reading. So if China seems to be turning, I'm not saying 1 point makes a turn, but if things seem to be turning, then you can bet the central banks are going to grab that opportunity and talk about it and cause them maybe to slow down their plans, let's say. So this CPI reading today is going to be very important. They have been recently very important, these inflation readings. If you ask me what I think, I will probably say that the same as last time. I think the move is going to be probably more exaggerated if we get a weak number than if we get a stronger number, at least in the short term. But let's see.
Anyone know what causes? Anyway, Blake, do you know what caused this big candle up in WTI yesterday? It looked like
me being short, that would have been it.
Okay, yeah, all right. So it got word got out, huh?
That could have been it. Yeah, word got out that Blake's trading crude again, and I got a little squeeze action going on. No, I don't know. Ryan, do you know?
No, I haven't seen it.
I mean, it like shot up $3.
I mean, there was something at, what was it, Iraq? Was it something out in Iraq?
Well, what I was looking for, Dale, is I thought there was like unfinished business up there because the 78% retracement in crude came in at just above it was where we were at yesterday, and we surpassed it a little bit yesterday, but the previous high was just a little shy of that. And I'm like, yeah, I don't know. I think they're going to squeeze it one last time. And they did. And, now it's hit a new high with relative strength divergence. So I would assume it turns somewhere around here, but hell, it's all about risk appetite. And Stelio said, probably the bigger reaction is going to be if inflation data comes down a little bit, and CPI comes down, at expectations or below. I agree with Stelios. The bigger reaction is going to be with that. And so, that's probably going to influence a lot of things, including crude. So sorry, I got on a little bit of
that's okay. I know that yesterday, in fact, that you said we head up to this, pivot that really once we got back under 47.45, it collapsed. So we're almost back there for a retrace. Still looking at that as a possible shorting situation.
Yeah, I mean, I'm still short. It's a small position for me, but I'm still going to play it on the short side because I think it's a little overbought at current levels. But the flip side is if you get like the S&P back above 47.50, I'm not going to want to be short anymore. Anything that has to do with risk off. I mean, that has to do with crude, or if I'm playing the dollar, which I have some dollar longs in certain against certain emerging market currencies. I'm not going to want any of those positions if crude continues to grind higher. And I'll take the chart here, I guess.
Okay. I just want to say that if people want a real boring position to just calm down with, they could trade Euro Pound.
Well, I'm sure Ryan's got a few things to say about the Euro Sterling. So,
right.
Too. I've got to go into that too, and just hold that thought really quick. This is what I was saying with crude. So you can see this previous high was just shy of the 78% retracement. So I was thinking yesterday was going to happen. So when it happened, we got to 81. Just shy of 81. I stepped in short. Now I'm still short. I'm not liking it a whole lot, but like I said, we are rallying, still divergent here. You can see higher prices, lower relative strength. Hopefully that, continues to stick, but I don't like the fact that it's not pulling back, but this has all to do with, the data from today. And then obviously yesterday's move following Powell. Now, before we get into the Euro Sterling, which I don't mind talking about either, because I think we're at some pretty key support. What do you guys make of the price action yesterday? Why did the equity markets rally and the dollar respond the way it did following yesterday's, testimony with Powell? Because I don't think he really came off.
Really? He did say he was a little bit apprehensive or cautious about Omicron and the potential.
Yeah, about China.
Yeah.
It was mainly the balance sheet roll off. We've had a lot of a couple of Feds coming out and saying, they want to roll it off faster, get the balance sheet down, quicker, get that going.
Yeah, but why would stocks rally in that and the dollar sell off?
Because if he wants to do it slower or slower than they want to do it, then that's keeping the punch bowl on the table a bit longer.
It's interesting. I was talking. I just retweeted from Trader Summit. I did an interview with Bill Baruch from Blue Line Futures 2 days ago, actually, and just retweeted it this morning. He talks about the Jekyll and Hyde effect with the Fed, and which is a smart way for them to play. They have basically good cop, bad cop, right? And they continue to do that. So they're not all on the same message. Like if he gets people to, like his governors talk about the balance sheet roll off, and then he walks it back a little bit, gets the equity markets excited again. Then they react differently. So the Fed loses a little bit of its credibility in the process. But what happens is you don't get a complete meltdown in equities either, which is probably one of the things they're trying to avoid, obviously, as they tighten monetary policy. And I think that's an interesting take because, bottom line is we're going to learn a lot more in 2 weeks. I think it's 2 weeks from today is the Fed meeting, right? Let me confirm that. I think he plays
both sides of the coin, though, doesn't he? All the time he plays both sides.
Oh yeah, how does he not? I mean, he has to.
Yeah, I mean,
Anthony said it. Yeah, it's the Fed kabuki theater. It totally is. And I mean, you can't just go out if you're the Fed. You can't just go out and say, "All right, we're tightening rates. We're gonna control this inflation. Doesn't matter what's happening with growth. F y'all. See you later." They can't do that. The market would go into pre-fall. So especially at these levels, after they've created this freaking monster of a market over the last several years. I mean, how do you unwind without completely putting this at risk? Of course tech stocks are going to take a bit of a hit. But you got the broad markets where you got so many of Americans and globally you got investors, but so many Americans' retirements are tied up into 401ks and IRAs that you can't risk that. So they have to be sensitive of what they're doing with equities here. But anyway, that's just my opinion. Do you guys have any thoughts about that, Brian?
Yeah, sorry, I was saying he did that yesterday. As I said, we had Fed heads saying that they want to, roll the balance sheet off, pretty quickly. He came in and said it's gonna happen sooner and probably faster than last time. Then flipped around the other side and said, but we haven't started discussing it yet, and said it maybe we'll start discussions in 2 to 4 meetings. It's give with one hand, take with the other, and everything's nets off to zero in the middle. So here we are. We're going to be sitting waiting for 4 months until they finally get to a decision on it, which calms down a bit.
So, I guess, like I said, we're going to find out a little bit more in a couple of weeks. Stellis, did you have any opinion about yesterday's price action?
I think it was justified, because I do think that what Powell said kind of took away a little bit of the ultra hawkish rhetoric that we've had over the past few weeks. So and the market was kind of waiting, clutching at straws. Are they going to give us anything a little bit more dovish than usual? Oh yes, yeah, they might delay. I still think they're on track to do what they've told us that they're going to do. So I still think that the market eventually is going to have to admit it and accept it and capitulate a little bit. But at the moment, things are still very buoyant. And as I've said yesterday, the more equities don't crash or go substantially lower, the more the Fed will not have any hesitation in continuing tightening, because that's ideally what they want to do. They want to tighten without the markets crashing. That's what they want to do. That's what every central bank wants to do.
Right.
And yields are going to have to go higher and everything. And as long as all that happens and stocks miraculously don't collapse, then I think everybody's going to be happy.
Well, what happened with yields yesterday is they did pull back. We've got the 10-year. I know I've pointed this chart out here, but if you guys haven't seen it, this is the 10-year bond market. You can see the ZNs, if you will, the the highs from 2017, big pivotal level. We reached that 2 days ago. Relative strength was oversold. It was very divergent intraday. You could see the, as we're hitting, let me go here. As we are hitting, new lows in price, relative strength was, I'm going to mess that up again. Here you go. Relative strength was not, which suggested a bounce. Now that we've got that little bit of a bounce, we've worked off some oversold conditions. I think the market's free to move around current levels, which is probably going to be post CPI. Now, we haven't heard from our resident bank deal desk trader, K-Man. K-Man, do you have any opinion about yesterday? And good morning, by the way.
Good morning. It's Harry here, Harry Hindsight. I have an opinion about that.
Well, let's go some Weatherman analysis.
Like
K-Man,
that.
go ahead.
Right. So, first of all, I think we have to combine 2 days. It's Monday and Tuesday. And what I said yesterday, I think S&P has been part of the sell-off of what we've seen on Monday, and I think people got to know about it or understood it, and that's a small part of the recovery that we have seen. If you look at, for instance, yen pairs and so on, and now that EURUSD has hit 105, S&P seems to be happy. On the other side, regarding the moves, we can't forget that before they start to quantitatively tighten, they are still injecting money in the market until end of March. We are still like, what is it? It's somewhere between 60 and 90 billion dollars a month. So the hodlers are still getting cash for now. And I reckon that's behind a part of the move. So before, so Powell said it's going to take 2 to 4 meetings before reaching a decision on QT. So that brings us into July or even August. And between now and then, there's not really money taken out of the market. And I reckon that's a part of the moves that we've seen over the past like 24, 48 hours.
Got it. All right. Well, hey, thank you, Harry Hindsight. Dominic asked for Fred Foresight, or it's better than Fred Foreskin, I guess. But let's say you got. Sorry, did that come out? Did I just say that out loud? I did. Oh my God, I'm so sorry. So let's. Thank you very much, K-Man, for your
kept Blake in trouble, man.
Sorry, it's Tradertainment, everybody. Let's talk about speaking of what's coming up. We got CPI coming up. That's probably the most important data of the week. My opinion is, and how are we going to react here? And I gotta cover the euro really quick, because obviously the euro's done absolutely nothing. I thought yesterday would have been what pulls it out of its range, but I have to say, and I'm going to reiterate what Stel said earlier, and I affirmed what he said. The bigger reaction that we're going to get is from a weaker print in CPI. So the reason why that is because everybody's all hopped up on high inflation and blah 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 blah. So everybody's kind of already in that boat, front loaded, if you will. And so the dollar is, the better reaction is going to be on a weak number. We see the euro pop, we see equities pop, we see the dollar under pressure, and everything is good. So the major trend line that I'm looking at with the euro is going to be right here around the 114. Let's just call it 114 and a quarter. That's where the trend line comes in at. It's also the 127% extension of this last move lower. And the reason why I point that out is because what you're going to see here in the euro currency, for example, every time you get sucked in buying a new high, so whether it's right here, I bought a new high, then you get smashed. You bought a new high, you get smashed. You buy a new high, and you got to be careful with that. Now, obviously, if we break above 114 and a quarter, the gloves come off, and you're going to start to see a dollar unwind, which means that the dollar index probably is below this support here and below its channel support, which I think is really important as well. So keep an eye on the dollar. Again, the bigger reaction is going to be on a weak piece of weak data, but should we be expecting weak inflation data? What do you guys think? I mean, what are we expecting today, and what do you guys think overall? Any thoughts?
I think inflation's going to stay there. The problem we got is volatility. As I mentioned in the past, in normal times when you get inflation numbers, if it moves 2 pips, that's a fairly decent move. Now, we can see swings of 5 pips. It can just as easily, inflation come out at 7.2% as it can 6.3%. I'm expecting inflation to show signs of moderating this year, but for today, you're right. The reaction, everyone knows there's inflation here. Everyone knows that the Fed's going to hike. It's going to take something special to change that narrative. So even if we do get a weak number, is that going to last in the market?
So do you play counter? Do you play counter trend to that then?
Yeah, you have to know what the market's doing right now to judge against when the data comes out. So if the dollar's looking a bit weaker based on what Powell's been saying, a bad number now, okay, it's going to push the dollar down. But when you start hitting those big areas, those big levels like this 114 in euro dollar, that's where the questions get asked. And if we can't break those on a weak CPI number, where the market is. And then you start to think, hang on, we're not breaking this 114.20 area. Then what are you going to do? Are you going to buy at the top then, or are you going to sell it and think, right, this is another range
right.
we're staying?
And, this is one of the important aspects that to trading that I think, a lot of new traders really miss is the understanding price action and what got you to the level and how it's reacting at that level. Just so you guys know, this is the ForexAnalytix chat room. I've been awake for about an hour and a half or so, around hour and 45 minutes or so. And the 4 o'clock hour is when I got up, and that's when I usually get up. And you can see this is all the chatting that's been done since I've been awake and all the charts that have been posted. And that's just in our general chat room for ForexAnalytix right there. And then you can see we have our macro chat room, which is the Forex flow room, our trades room where we talk about the trades that we've taken, I took, where I'm, getting long or short things. And, join the ForexAnalytix community because, these are the conversations that we have inside of our community. And, we have our annual pricing that is going on right now. So make sure you guys take advantage of that. But Ryan, you make some great points, especially if the euro gets up there. I mean, if the euro gets up to the 114 level and it's stalling and, we had that weak CPI data and it's not following through. Yeah. You've got to take the other side of that trade.
Let me show you a quick example. Can you pull up the Euro Swiss chart? Stick
Euro
it on a 15.
You got it. It's right at the 105.
Yeah. Stick it on a 15-minute chart.
15-minute?
Yeah, stick it on a 15.
Oh, now you're going to make me crazy.
Right.
Okay, go ahead.
So look at this. We had this move up to 105. What are we not doing? We're not breaking 105. I'm short at 104.93. Stop loss reverse at 105.15. This is what you do. I mean, you could apply this to where we are in euro dollar on a wider timeline.
Yeah.
If you don't break a level, what are you going to do? You've got something. We know that it's not breaking 105 here. So I'm happy to try a short into that. And, I may be wrong, but at the moment I'm not wrong because 105 hasn't broken.
Yeah.
And, when you're talking about trading levels, that's what you got to do. And you can apply this, this is a short-term 2-3 day range. You can apply that to euro dollar on a 2-3 month range that we've been seeing there. The mechanics are exactly the same. You've got a reason to trade a level, trade it. If you're wrong, know where you're wrong.
Awesome. All right. Well, thank you very much, Ryan. We got a couple minutes before data comes out. Estelios, do you have any last minute opinions before? And I see Grega Horvat. He's our Elliotician for ForexAnalytix. He's in here. He's actually in the comments. Grega, you can turn on your mic if you want.
Yeah, Greg, I was impersonating you.
I'm
busted.
Hey, Grega, how's it going? Good to see you. We have data coming out just in 1 minute, less than a minute. Stelios, do you have any last minute opinion here?
Not really. I
Too late.
said my view before.
Geez. No opinion. What are you here for? I want opinions.
I voiced my opinion before, didn't I?
You did.
Opinions are like buttholes. Everybody's got one. Let's hear yours. I'm just kidding. Did I say buttholes?
You've said so many things these days, man. You're talking about my nuts and everything.
Kids,
Blake, I've been running around the house looking for my foreskin.
This is a data flash at
Wash his mouth out with soap and water, Dale.
I will, man. I can't find it.
All right.
Run out.
All right, guys.
Use it so much.
All right. Data, come on. Let's we got
Let's
4
go.
seconds. Whoops. Get out of my way. Oh shoot. Dang it. Sorry, guys. Let me pull that back up again. All right, here it is.
Oh, it's strong. Core CPI 5.5% versus 5.4.
Oh, look at this. Look at the market just ripping higher, though.
Actually, CPI unchanged. Sorry, not unchanged, in line. It's just core that was 0.1 better. And the market's rallying. Wow.
Yeah, market's rallying. We're seeing some dollar weakness come through the market. Not the reaction that you would expect. And that just probably tells you that the market's probably kind of short here, right?
Yeah.
So, you got the dollar is trying to push up against that 114 level, but I'm talking about the euro. Aussie's unchanged. Really, the Canadians
it's pretty
still
much on the money, really.
Bear flag lower or bearish
gold lower on that numbers.
Gold's lower. Oh, look, it's a little bit of a knee
silver higher.
Here. Silver is higher. Gold, well, that's usually better for precious metals. Generally speaking, we're challenging the underside of the previous triangle of silver. So that's interesting. We're right up against resistance. Gold struggling. You guys, any last thoughts before we pass it over to Dale so we can do his interview? Grega, we barely heard your voice. Any opinions here?
Yeah, actually, I still think that sooner or later this dollar index will stabilize and rally, and stocks probably will stay in the range trapped between these January highs and the lows that we were seeing on Monday. So I think that this consolidation will not be broken so easily.
Oh, man, don't rain on my parade right now.
Yeah, but longer and more sideways the price action will be, the stronger can be the breakout.
Yeah, well, you know what? We are definitely consolidating. So let's hope we get a breakout sooner rather than later. But you don't think it's coming anytime soon?
Yeah, actually, I'm looking for a triangle in the S&P 500, and looks like that we are still missing a few more legs here.
Well, if that's the case, and if you're looking at a triangle being formed, if it's symmetrical,
yeah, exactly.
Could take us up here, and then here's the lower end of that potential triangle. So
exactly.
If you're looking at, so in this consolidation, would you look for continuation higher then eventually?
Actually, I'm seeing resistance around 47.50.
Yeah. Okay. So 47.50 is previous support, current resistance. It's around the 78% retracement is kind of close up to there. So
Monday's low holds, Greg.
And remember, this is where I would give Stelios's left finger for a move up to 47.50. If you remember from yesterday, right?
Stelios? Yeah, it was left something.
Yeah, you've given everything away now. That's it. I have nothing left.
Okay. All right. Well, hey guys, I want to say thank you very much for tuning in. Greg, thanks for your opinions and your analysis and being here this morning. Also, Ryan, K-Man, Stelios, as always. Dale, thank you so much. And I'm going to let you take over so you can do your interview. But make sure you guys take advantage of our annual pricing discount. We do not give this pricing discount out often. This is the best we do it of the year, and it's at the beginning of the year. So, and it'll be up for like the next week or two, and then it's gone. When it's gone, it's gone. So you guys all know that have been around for a while. All right, Dale, it's all yours.
The window of opportunity is closing. Hurry up, jump through. Anyway, Raksha, welcome back to F.A.C.E, my trading warrior sister. How are you? It's been a long time.
How are you? I'm very good. Thank you so much. And how are you doing?
Now that I could hear your voice, doing great, Raksha. Happy New Year. Happy New Year to you and your family. And I've been looking forward to talking to you again and interested. And we've had some pretty active markets here in the last few weeks. Maybe you want to share your screen and yes, tell us what you're seeing on your radar here.
First of all,
Boomy is saying.
Yes, Boomy.
Yes.
Very happy New Year to everyone here. I hope this New Year has been like wonderful for you guys.
Yeah. How's it going with Omicron where you're at?
Everything is good here. And since, from the first day of this New Year's session, I have been on the tail of oil and gold. Okay. So that's on my active radar right now. As you can see, the net's around on my screen right now. So,
okay.
So that's what I'm actually going. Recently, what I've just bought oil, US oil.
Okay.
So right
It
now,
looks like you have different charts. They look different to me. Are they the same that you've been using for a while?
no, it's not
Different
different.
features on it, or the green
I
vertical.
have just put Bhumi on that. So
I see.
for the confirmation parts also, and for the entries and targets also.
Yes.
So as you know that I always look on the historical prices and the support and resistance of the historical events before. As you can see right now also, oil is standing at the 2009 high price right now as a resistance. So along with that, I use Bhumi Maya levels also. So for my extra confirmation, plus also it tells me that whether what my support and resistance, which I have calculated, is it correct in the place or not, because as it shows me the demand and supply also of the market. So it's all together. That's why it was just a little bit messy at that time when I was just putting that Maya on this chart right now. Yeah, I have added certain features in it, and also I'm just putting few extra support and resistance based on the GAN levels also. So that's why it's a little bit different in this as our earlier one.
Okay.
Yeah.
All right. So do you have some upside targets that you're projecting?
Yes, it's 82.26 US oil right now, as I'm seeing, and actually my long-term target is much higher than this. It's near about around like 85, 86 here at this level, but still I will be looking at 84 as my resistance for the next high level if it breaks 82.26 in crude. So right now, as practically speaking, I have just booked my profit here on 2009 high, because this price is much stronger than any other level right now, because always, the historical prices plays a very important part when we are trading for any kind of resistance, and we need any kind of resistance and support, especially the highs and lows of the year.
Right.
So
okay. So now you're taking some off the table, and you'll recommit on a pullback, or you're just going to stay long here?
Right now, yes, I will be looking for a breakout of this level of 82.26.
Okay.
I'll just wait for a retest on a lower time frame, at least like 30 minutes or 15 minutes or so, not lower than that.
Okay.
And I'll put on that Maya levels for the. I'll just show you right away. I'll just put on the Maya levels here for any. Yes, it is exactly nearby the level of a level of bullish breakout as per Maya also. So now it's an extra confirmation for me. So I'll be looking for a breakout and retest of this level, and I'll just again go back for a long side for 84 to 85 levels here. And my SL will be very near right now, because it will be just below 81.50, not more than that. So just waiting for this oil right now.
Okay. And, the energy complex, are you getting hit hard for energy bills and to heat your house and everything? I believe you're in the UK, right? Or not? You're in India?
Yes, definitely. Okay. Right now, frankly speaking, Dale, since this 1st of January, it has been such a complicated year for me, because I have been calculating everything technically. Yes. So I am a little bit off from the fundamental part, the Fed rates and everything which is going on right now. I am very off right now, being very true and very honest. So if you ask me anything technical, I'll just be right away, because I have been all these calculations since the day 1st of this year.
Okay. So explain to us your technical levels in gold. Okay.
Gold has already reached my target. it was a very messy week. The last week was a very messy week for gold. And I was not at all trading anything between this range, which I have already marked. Actually, I was just sending the newsletter to our subscribers about gold levels and all. So I clearly told them, just do not trade anything between this level of 1799 to around like 1781. It's a huge level, and there will be a lot of up and down and to and fro movements. And it was just like it said. So this breakout was given on the 10th of Jan, but it did not just manage to just
fail.
It failed it, and it just didn't manage to give respect to the levels which it should be. So once it already gave me a target of this very small of Jan 21 low. This price is Jan 21 low around 1801. So again, when the price was here, I was entering a buy side on this breakout. I was stopped here, but I knew that if it is breaking up for the first time, obviously it will be going again for the retest one. So I was wrong here, and my target was 23, and which it gave me the target of 23. It actually gave me the target of, and right now also it's just trying to test the level back again. So once you see this gray area here, this is a support and resistance range here based on a monthly chart. So once it has entered in this gray box, it is going to go for the upper channel of this support and resistance level. So that upper channel is around like 1830. So I'll be looking for 1830 right now. Right now, I'm not into any positions. I'm just watching here. I'll be waiting for a breakout of this 30 for sure. Or if anyone is interested in scalping or something like that, they can just do the scalping from 1824, the breakout and retest of 24.355 for the level of 30. Very short and sweet trade on gold right now, because this month is very, very complicated for me in the gold especially. I am done with my trade. I was from 1800 to 23. I'm done. I'm just dust off my hand with this and just watching it right now.
Yeah. So have you shortened your time horizons because of the messiness of markets and lowered your expectations for magnitude of moves, and kind of just playing things closer to the vest and being happy with smaller gains than trying to swing for the fences in this environment? Absolutely. Yeah.
The only thing which is supporting right now why gold can be bullish right now here is because when I was checking for the chart of DXY,
it's breaking down.
It has already touched my level. So I was just expecting to get a support here at 95, but now as it has already, as you see the gray box again, the yearly support and resistance range here. Now it has entered this price, then definitely it will be going to test this 94.901 for sure now in DXY. So this fall obviously is helping the prices for the gold to rise up back again. 1830, very, very soon we can see 1830 for sure.
Okay, so that's a big move in the dollar. So do you think that we've had a major dollar top with this break, or do you think that we could still hold this 95 level?
No, I don't think so that it will be going more lower than this 94, because this will be a very crucial support for dollar. I'll just jump to the higher price. So if it will be breaking this level, the orange line and this range here, 94, 94 below 94. No, I don't think so. It will break off. But if it is below 94, 94.33, that will be the last resort. But I don't think so. It will break 94 or lower than that. If this candle closes above the 95.340 precisely, then we can see a very strong support here. Because if it will break 95.340, then 92 is something I see in dollar on a longer term by this month or the first and second week of Feb. So this can be a very, very huge fall of the price in dollar. The 95 is a very crucial, 95 to 94.90 is a very crucial range here right now.
It sure is. I think it's the bull's case. We start taking out 95 and, you know, that huge sideways motion that we had for almost a month and a half. You know, I was thinking we'd break and take out the longs, the dollar longs, and then we take out the dollar shorts, but we'll see. Big move just while we're talking.
Yeah, it has entered the supply zone here. As you can see, the red background price here right now, the red background color here. This is the Maya plotted right now. So it has entered a supply zone. So yes, we can see some more downside levels if it just breaks this level, as this level is also converging on the green band here. I just this band here. So this band is a price range where the bears will have a strong support and bulls will also have a strong support. If this is broken, then definitely we're going to see some more downfall in the prices. And if it is bounces from that and manages to close above this 95, this range of green band, then we'll see again some more upside movement in dollar index.
Okay, so we're at this 95.29, very important support.
Yes, absolutely.
Okay, so anything else you want to share with us today?
I was just following oil and gold here, and I was just giving the DAX also to a few of my subscribers here. So I think it's a wrong window. Wait a minute.
So the DAX held up pretty good during the sell-off here in the US, didn't it?
Yeah, DAX was very easy to trade by this week. As you can see, I told them to buy here about this level here, the green band, as you see, and as soon as it has just retested the level, it has given me the target till this price level of 16,000. So now the support here will be again this 15,967, this price as it's visible right now on the chart. If it is broken, we can see back again another support of the S2 will be like around 15,920, 30, this range.
Yes.
But mostly I feel it's going to go up again and test the levels of 16,180, 16,181 around this price. So DAX I'm still bullish about this price, but as it's back again to the support zone and it's rejecting the red band here, a little bit, anyone who is still holding the longs on DAX, just be careful at this level right now. So this was DAX, and one more, I was just following Nasdaq also. So Nasdaq has met all the levels, the buying levels here. So right now, again, it is also at a resistance at 15,850. So this is a resistance zone right now here. Above this level, we'll see more on a longer term. If you ask me, it will be 16,300 price. And between the important levels, which I have already marked, like 16,030 and then 16,150. And 235, and then eventually it will be like 16,343. But if this range has been proved to be a very strong resistance now, and if the price manages to close below 15,778, we'll see back again prices back to 15,500 to 15,400 level.
So the DAX is much stronger than Nasdaq.
Yeah.
Yeah. So foreign markets, maybe it's because they smelled a weaker dollar coming.
Yes, definitely. So was the case with, I think, so was the case with SPX too. I was just doing all the calculations back here. So I have all the charts ready this time. Unlike every time, I just come and tell you that I have only gold and I have only crude in my hand right now. So I have DAX this time. I have SPX this time.
Okay.
So this is SPX. So I'll just tell you that how does it look like on my levels here. Again, this is confluencing. My calculated levels are just confluencing at the red band here, which is the resistance. So 4721 is the resistance here for S&P. Above this, we will see the prices to around like at least 4742, at least 4742
Yeah, that was a big level.
Yeah, at least this level. I'm pretty sure this resistance might be breaking off. It will be breached, and it will be testing this level for sure. But this level, the blue box here, as you can see, which ranges around like between 4720 to around 4703. This range is very strong resistance. Much stronger than the other small boxes which I have just written, because it's a smaller time frame one. As the higher the time frame is, the stronger will be the support and the resistance. So that I feel that it might reject this price and test it back, but eventually it will be bullish and at least will touch 4740 to 4750 S&P. As the demand zone is also developing right now. It's still not done. Once the candle is closed, that will be confirmed. So it's within another 1 hour, we'll be able to give you the confirmation that there is a demand zone right now, and we can go long on this. But still, if anyone is planning to do it, please wait for like at least 4722. Just wait for this level to break out and retest, and then just go for any longs here. So longs will be, if on a longer term frame for the coming week, if you say, it will be around 4826. So that will be the target of S&P.
Okay. What a great presentation. It's really was great to see your charts and hear from you, Raksha.
Thank you so much.
And I hope that 2022 is your best year yet. And,
thank you. And
if you want, you could, show your website so that people know how to get a hold of you and reach you. Of course, Raksha's Twitter handle is RAKZ hyphen. What is it after the hyphen? 27.
So
her
that's
lucky number.
That's my date of birth, actually.
Oh, okay. I thought it's your lucky day when you met your husband. All right. 27th of what month?
27th of August.
27th of May here. So
okay.
Yeah, we're both 27s here.
Luckily, I met him on 27. So
oh my goodness.
So it's like everything is this universe just combining. The 9 number is combining me with the best of the persons of my life.
Oh, well, you say hello to Karthik for me, and so there's
that's my Twitter handle. And this is a website, so you can just simply log into niftyanalysis.in.
Nice.
Every
redesign here looks
yes,
good.
We have just redesigned this. We have everything here, all the informations, and if you want to go for the products which we have, like the Bhumi which I was showing you, you just type in niftyanalysis.in/store.
Yes.
And all the informations are here, what all markets we are covering, what all things which we are offering you. So all these informations are here, and you can just reach out to my Twitter ID, or you can simply just go to to our official handle. This is Nifty_analysis.
Okay.
That's our official Twitter ID. So all the information is how to reach out to us for any kind of, even if you're stuck in some trade also, then you can also just, that's what we are actually doing right now.
What do you charge for hand holding?
Right now,
I'm just kidding.
we're just charging that. Okay, always remember, as you say, remember in your prayers. So that's what we are charging right now.
All right. When you're praying for a trade to work, you should probably get out of it. So that's my advice. So Raksha, thanks so much for being here. Let's keep you going in the rotation, and appreciate your great work.
Thank you so much, Dale. And I also wish you a very, very, very happy new year, and everyone who is here with you, a very happy new year from my side, and wish you an amazing year and amazing every moment just coming in your life.
Nice wishes and great looks by Raksha Soni, everybody. Thank you,
Thanks.
Raksha. People saying great interview. I don't know if you could see it. Always a good interview. People are glad to see you back. So thank you.
Thanks.
Yeah, thank
so
you.
much.
Thank you once again, Raksha. Good hunting. And thank you for
Thanks.
your giving spirit to show your work.
Thank you so much.
Raksha rocks, Hugo says.
Thank you so much, Hugo.
All right.
Thank you so much, Jatin, Paul. I can't read all the names, but thank you, everyone. Just thank you so much. It's really motivating.
All right. Well, talk to you soon.
How I give you the keys to this Zoom meeting now.
Okay. Thank you very much, Raksha.
Thank you so much, Dale. And
all right. All right. Thank you, Raksha, and everybody. You could join the team in 20 minutes for the morning edge. They're not putting out those recordings anymore. You have to be a member. And we'll see everyone tomorrow. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. Adios. See you, Raksha.
bye, Dale. Take care. Bye-bye.
Bye-bye.